Hi, students. My name is Hanel Beresibo, and I welcome you to another lesson on financial accounting. Today, we have the theme, Formation of a Company and the Nigerian System, with the topic, Methods of Raising Funds from the Capital Market. By the end of the lesson, you should be able to define the capital market and state and explain the various methods of raising funds from the capital market. Capital is very important in starting and growing up a business. Even when this business is established, there may be need for more capital to be invested. This capital can be sourced from the capital market. Now let's see what capital market is and the methods used for raising capital. A capital market is a market where shares, bonds, etc. are traded. It is also a place where long-term debts are bought and sold. This market helps channel surplus funds from savers to investors, who then invest them into productive use. Generally, this market trades mostly long-term securities. Now, what are the ways to raise funds from the capital market? The following are ways through which funds are sourced from the capital market. Number one, we have public issue. Next, we have rights issue. Thirdly, private placement. Fourthly, offer for sale. And lastly, obtaining long-term loans. Now, what are public issue? Public issue is a situation whereby shares, bonds are sold to the public by a company. Those who buy these shares are known as shareholders. Next, we have rights issue. Rights issue is an invitation from a company to its current shareholders, telling them to buy its shares for a discounted price. Now, in this rights issue, additional shares is given to current shareholders. Another method we have is private placements. Private placements involve the sale of shares or bonds to private investors. These investors might include banks or individuals. Private placement often does not need to be registered with the Securities and Exchange Commission. Now, private placement can also be known as private investment. Now, let's see another method used. Offer for sale is another method used to raise capital from the capital market. Offer for sale involves a company selling its shares through a financial institution at a fixed price. This can be done through newspapers, advertisements, or television advertisements. Now, let's see the last method for this class used by a company to raise funds in the capital market. Obtaining long-term loans. Long-term loans are debts that mature over 1 year. Now, these debts are charged high interest rates. Long-term bank loans are always supported by a company's collateral, usually in the form of the company's assets. A company may choose to raise funds by obtaining long-term loans. Having discovered this method, we've come to the end of our class today. But before we go, let's take a quick summary of what we've discussed so far. We learned that capital market is a market where sellers and buyers engage in trade of financial securities. We also learned that methods through which funds are raised in the capital market include public issue, rights issue, private placements, offer for sale, and lastly, obtaining long-term loans. Now let's take a few test questions to test ourselves. Question 1. The market where sellers and buyers engage in trade of financial stocks is known as A. Home market, B. Foreign market, or C. Capital market. The correct answer is option C, capital market. Question 2. Dash is an invitation to current shareholders requesting them to purchase additional shares in the company. A. Rights issue. B. Private placement. Or C. Offer for sale. The correct option is option A. Rights issue. This is where we end today's class. And I believe by now, you know what the capital market is and the method used to raise funds from the capital market. See you in my next class. Bye-bye.